Hi everyone, it's a great honor to deliver this keynote talk for the NICE GCBMS conference. And I'm just going to share my screen here. By the way, my name is Will, and I'm a faculty member at Cornell University. Before I delve into today's topic, I want to briefly mention the several lines of research that I've been pursuing over the past few years. They mostly concern digital economy and financial technology. What I'll talk about today is digital payments that falls into the first sub-area. It's on digital economy, platform economy, and data economy. And I've done some work applying machine learning, big data analytics to finance, as well as developing new AI models for finance. And the third area, which is about blockchains, DeFi, Web3, is more speculative. I think it will take multiple iterations for many of the technologies to materialize. They are, however, quite related to what we are currently doing with our digital economy or digitization. It's just a different way of providing these financial intermediation services. So I've done some work on that as well. If you're interested, feel free to take a look at my website or my SSRN VR working paper page. As I mentioned earlier, what I want to focus on today is about digital payments. And in particular, I'm going to talk about this paper on the rise of e-wallets and buy now, pay later. And, this is joint work with Wen Longbian from Tsinghua University and Yang Ji at Xiamen University. So we all know the past decade has witnessed a phenomenal rise in digital wallets around the globe. Different countries might pursue different models, but safe to say that global adoption has increased sharply, and the COVID-19 pandemic has accelerated the adoption as well due to the need for contactless payment. Right, Apple just introduced its own digital wallet credit recently as well. Now, one important aspect of digital wallets is that it starts with a payment function. And that's how many fintech platforms or firms start before they expand into insurance, credit provision, so on and so forth. And that's what we want to emphasize and explore, right? How the payment function interacts with credit provision in our particular setting. And the number of digital wallet or e-wallet users is expected to exceed 5.2 billion globally, just in another 3 years. And it covers both online payments, online transactions, peer-to-peer transactions, as well as on-site transactions, primarily through QR codes. I think that has become the industry standard. Now, if you look at many of these e-wallets, they offer several payment functionality. Some of them are just conduits to banks. For example, linked debit card or linked credit card. Others are more native to the digital wallets. There could be coupons, which is actually a small fraction in any case. But there's e-wallet balance that serves like a checking account. E-wallet savings, which is essentially wealth management products, and e-wallet credit. In particular, buy now, pay later has caught the attention around the globe over the past few years. And that's something I'm going to zoom in to discuss. So it's typically associated with digital wallets. It's a form of short-term fintech credit, offering customers to typically pay a 25% down payment and then pay the rest in 3 additional installments at 2-week intervals. Safe to say, many merchants used to offer payment installments, but they were not scalable and they were not issued by a third party. And here, the buy now, pay later is typically provided by BNPL providers or e-wallet providers, not the merchants themselves. That's an important distinction. What we do in this study, though, is we want to provide the first ever empirical description of what's going on inside the e-wallets, how the different payment options actually interact and compete with one another. And our discussion on BNPL is also the first for a developing economy, arguably its largest market, the Chinese market. And we have a experiment to help us to understand how BNPL affects consumer credit provision and the spending behavior for the users who got access to BNPL, especially the users that accessed the fintech credit for the first time or credit provision for the first time. If they didn't have credit card. So the data we're going to use are from one of the leading e-wallet providers in China. We're not allowed to mention the name, but it's not too difficult for you to figure that out. And what we find is that internal payment options, in particular BNPL, dominates e-wallet. And BNPL crowds out other payment options, but it's not a perfect substitute with credit cards. In fact, it plays a complementary role with credit cards in the Chinese market. It's more of a cash replacement. So the main theme is for societies that are transitioning from cash heavy to cashless, BNPL as a form of short-term credit actually plays the role of the new cash in such economies. It expands credit provision on the extensive margin, partially due to its wide adoption on both sides of payment networks. And we do a number of heterogeneity analysis to show that BNPL actually facilitates financial inclusion. And finally, through a randomized experiment, we show that BNPL boosts consumption, but not indebtedness or default of the users, contrary to what the earlier literature has found. In the interest of time, I'm going to skip the literature part. I already talked about the emergence of e-wallet. It has wide adoption around the globe. So it's not a Chinese phenomenon. And even though some designs differ, there are general trends. In particular, many countries are converging to the Asian model of having a super app and ecosystem with an e-wallet. And for a good reason, right? Both for e-wallet and BNPL, even though US is still the largest market in terms of transaction dollar amount in BNPL, is converging to the Chinese model because the low interest environment is not going to last forever. So if you just have a BNPL provider and have that as a standalone payment function, it's not very sustainable. You are not going to always have cheap financing for the credit they are providing to the users. But if you have an ecosystem where the user acquisition through BNPL, through digital wallets can benefit your other products, other services, the synergy itself is going to make it more sustainable. And that's what many Asian countries have been doing with e-wallets and BNPL. Again, I'm moving pretty fast just due to the time constraint. In the paper, we provide a lot more details about the growth of BNPL. And what is so special about BNPL and e-wallets in Asia? Well, number one is the largest market based on the number of users. Its model has been copied around the globe, in Singapore, in Indonesia, so on and so forth. And our data set essentially covers the entire population in China, aged from 16 to 60. So it's very representative and informative. And again, this is a country that transitioned from cash heavy to cashless. It serves as a good example and informs about countries that are going through similar transitions. So it complements all the studies using developed countries, data from developed countries such as the US or Europe, which were not cash heavy to start with. Okay. All right, so let me describe the data briefly. we basically have a cross-section of all e-wallet users from this e-wallet provider in China. Again, our sample is randomly drawn from both online transactions and on-site transactions. It's very representative of the population. And we also observe merchant and consumer side characteristics, which is hard to observe if you only use data from banks. You can only infer fintech credit and fintech digital wallet usage. We also have a second data set from a randomized experiment conducted by the same e-wallet provider back in 2017. It was a 2-month experiment. Basically, a group of users, e-wallet users, were given BNPL access. And other group, the control group, wasn't given access and also did not have any anticipation that they will get this type of access. Now, the experiment is done outside a few major cities because in those major cities, they already have credit access or BNPL access. And then 2 months later, the control group was also given BNPL access. We didn't observe the raw data that the e-wallet provider has. We were allowed to randomly draw a subsample from the treatment group. And then in the control group, we draw it from the full control population based on consumption, propensity of consumption, and several other characteristics. Now, if you worry about the pre-trend, by the way, we're not allowed to export the level information due to the data privacy protection in China that was implemented around the summer in 2021. We have the ratio though. This is the consumption by the treatment group and consumption group, pre-treatment. And then you see that the treated group suddenly had a bump in consumption. Now, after these 2 months, maybe some longer outcomes would realize only after several more months. That's something we don't observe the counterfactual. Having said that, the key output that we are concerned with is consumption, which we observe in 2020 dataset as well. And also for indebtedness and default, the truth is not many people were loading on the debt. So default wasn't a big issue. I'll show you. So the first exercise is just to describe how people are using the various options within the e-wallet. And actually, let me show you this. So the e-wallet balance saving and credit accounts constitute 62.7% of all on-site transactions. And among them, BNPL is the most dominant. Okay. For online transactions, the internal payment options constitute an even bigger percentage, and e-wallet credit makes up 54.2%. So clearly, BNPL is dominating, and the institutional setup is such that it's almost impossible or very, very unlikely that someone who was using credit card will switch it to BNPL and then lose the credit card access. That's not observed in the sample, and according to the e-wallet provider, that wouldn't be the case. So whatever BNPL users were getting tend to be on the extensive margin, and I'll be more specific on that. Note that the internal payment options will generate data that wouldn't be very accessible to banks. This is another motivation for open data initiative and even for the government to develop CBDC, central bank digital currencies, just to make sure they have access to data. And data will be very important for credit decisions as well, right? Both for banks and also for the regulators. Now let's look at how BNPL has affected payment choices. We actually write down a econometric model to show that BNPL crowds out other payment options. As you can see, when the BNPL, when customers have access to BNPL, the usage of other payment options decreases. However, BNPL is mostly serving small transaction amounts. And essentially, it's a form of new cash rather than a substitute for credit cards. That's something to keep in mind. And these are just tables showing for the users with both credit card and BNPL access, they were really using BNPL for small transactions and credit card for larger transactions. Now, in terms of, for both on-site and online, in terms of credit provision, right? The literature has been interested in finding out whether fintech credit offers, complements or substitutes for credit cards, for other forms of credit. And typically, we don't observe users with both access, and our data allows us to do that because we directly observe a group of consumers who had both link bank cards, bank credit cards, and BNPL access. And more importantly, we observe both consumers and merchant side, so we can look at this two-sided market to figure out why or how a BNPL was expanding credit provision. And this is just from consumer side. Consumers who didn't have BNPL or who didn't have credit card access are getting BNPL access. So in that sense, it's expanding the extensive margin on the consumer side. But if you look at the merchant side, adoption has to increase. Otherwise, you give consumers credit access, but merchants don't accept that. That's not very helpful. What we observe in the data, though, is merchants increase their adoption of BNPL as well. So because both sides are adopting, overall, that increases the fraction of transactions completed through BNPL payment. So if you look at the transaction level, you can see that among all on-site transactions, 92% cannot be completed with credit cards, yet about half of them can be completed with BNPL. So BNPL is really playing this inclusion role. Now you can look at different regions, you can look at, you can dice the data using other characteristics of the wallet users. You find similar phenomena. In the eastern region, in the western region, in the northern region, credit card access is much lower, but BNPL usage is quite a bit greater. Next, we go back to the experiment back in 2017. It's a randomized experiment to help us to draw causal inference. Basically, once the users are given BNPL access, do they actually consume more? And the answer is yes. What we find is that consumption of the treated group increased by 73 RMB, which is about 30% of all the consumptions done through e-wallet and about 5% of the total average monthly consumption as reported by the National Bureau of Statistics in China. It does seem that e-wallet is extending credit to the bottom, the underserved group. So that's good. But at the same time, we worry these are people who didn't have credit access before. Will they be taking excessive loans? Are they managing their debt properly? Earlier studies based on US or European data shows that additional credit access actually leads people to overspend and become more indebted. In the Chinese case, though, the users, especially single access users, only have access to BNPL and not credit card. We're very careful. When they start to incur interest, they actually scale back on their BNPL usage. So they don't typically become revolvers. It's the ones who already have credit cards that tend to become revolvers. What this means is, at least one key interpretation is that the users who didn't have credit card access, but now have BNPL access, are very careful in building up their credit history within the ecosystem, within the super app. Because they don't want to lose the convenience of being able to use BNPL. They also don't want whatever they do now to hurt their future eligibility for using other apps, or even externally for applying for credit card. So that moderates the indebtedness in the system. At least in this super app model, when there is an internal credit reference system, users doesn't seem to be overspending or getting too much trouble in indebtedness. we almost observe no default is less than 2%. So with that, I think I should conclude. We essentially open the black box of e-wallets and link fintech relative to fintech payment, because these functionalities are now standalone. They have synergies, they interact, and this is what we meant by cross-sale capacity, right? Banks have cross-sale capacity, and fintech innovations are about unbundling and rebundling many of these functions. We do find that internal payment, especially BNPL, dominates, but it can play the role of digital cash rather than replacing bank credit card. Credit expansion effect of BNPL for both consumers and merchants are observed, and BNPL boosts consumer spending but not user indebtedness. Now, we can debate whether e-wallets or BNPL are the best form of digital payments. Many people would advocate for digital currencies or central bank digital currencies, but many of them are still held in digital wallets in any case. So it's an important area to study. I'm happy to take questions and discuss this further offline. Thanks for joining the keynote session.